Previously on Mad Men.
So what we proposed is to contribute at least 5% of our stock, which is worth at least $25 million today. Could be more, depending on how you look at it. And another $25 million in hash, which is the utility token that's native to Provenance, into the Ionic transaction. So that works out to about $1.35 a share in value that we're contributing.
Just for full disclosure, I'm not a shareholder. I'm just here to defend the community, bring some facts and numbers. The current financials that are known from Ionic Digital is that they haven't sold a single Bitcoin. If they had like $100 million plus the current known Bitcoins, they are doing still a remarkable job.
The point is that the board has already destroyed the value. They had the opportunity to create value and they've destroyed it.
At the end of July, our combined cash and Bitcoin balance was over $200 million. So we are pleased with the progress we've made over the past 6 months while maintaining our liquidity at relatively constant levels.
Ron is not a shareholder. He's an idiot. CEO stepped down in July. We're in the middle of August right now. We only got we got a tweet from the CEO saying, hey, by the way, guys, I stepped down a month ago. I thought he was getting fired. I'm still pretty sure he got fired, but whatever. It is what it is.
So you also know that basically if he didn't do anything, he would get renewed. If he was doing this by basically leaving as Ash left.
Prior CEO Matt, obviously, he worked with Hutton. I think a part of kind of him leaving, part of me stepping down was I think they wanted a bit more independence as a company as they grew and not to be as tied with Hutton. I understood that. I resigned from the board. I think Matt saw that like he would never be seen as independent because he had kind of prior history with us. And I think John is able to do so because we've never known him before.
Ron is not a shareholder. He's an idiot. He was a guy telling everyone that Mashinsky did nothing wrong.
Maybe he is a good guy, but do not believe in everyone, including Alex, including Celsius. Please look at the facts. And there is a lot of manipulation in the crypto market on stocks.
Ionic has not suddenly got some magic formula that is completely different. In fact, it is miles away from the competency of all the other people that they're competing with right now.
I disagree with what Simon said. I think the numbers speak otherwise.
It must be their magic board and their magic equipment and their magic innovation.
I think it's Midland. I think it's really Midland, and it's the reason that you don't see the rates being over 60%. In the case of Cedarvale, do you know if it benefits from the same types of economics, especially when it comes to the renewable market?
Cedarvale is in West Texas, so it's all within the West Load Zone. So I think we ran like a backcast of last year using our curtailment software. If you ran on a 24/7 basis, cost of power was, call it around like 5.8 cents or something. And then if you ran it with 8% perfect curtailment, it dropped your cost of power under 3 cents. So that's primarily driven by the renewables in the area and kind of the volatility of high peaks and troughs.
So now we need to get it in the hands of someone competent. The time to create the value has passed.
To that extent, I want to ensure that the company is in control of its own destiny with dedicated in-house talent for all strategically important roles.
I spoke to a private mining company. They're bigger than Ionic right now. They don't have the cash on hand, but they want to go public. The assets we have, like Cedarvale, you can sell that to a real company. Core Scientific wants it. They've already told me they want it. Mora, Riot, all these companies. I spoke to CleanSpark. They want it. They want a breakdown of the assets. All these companies want the assets.
Well, they want the assets, and why shouldn't we not want it? What is the difference here?
Just because they're real professionals and they know how to put the assets to use, we don't. You can sell Cedarvale to a real company. No one's going to have the cash to do that. They'll probably give you stock in their company.
What data are you referring to, Ron?
All the monthly operational reports that are filed in court.
That's got nothing to do with 2024.
That has something to do with 2024.
So let's take the best mining month we had post-emergence and just multiply by the Bitcoin closing price on that month, which was 37,700. So if you do that calculation, it gives you almost close to 11 million. The difference here is probably revenue from curtailment and other energy plays, which already show that by November and December we were doing something good with managing the company assets. And you had the same group of people that didn't do this basic calculation. let's now do a small breakdown to understand how someone can reach the same value that Ionic is publicly stating that they mine Bitcoin, which is 24,000. So this starts by understanding how much Bitcoin the company actually mine according to the blockchain. So if you just go and sum all the addresses, they mine around 298 on February and 307 on March. So around 300. And on February and March, you had the same equipment since October to January, the same sites, and the same contracts. So this means that the company here is very likely the same company that was mining on October to January. Now let's assume those 300 Bitcoin. So the first thing you have to do is calculate the curtailment. You have here a revenue, and on this revenue it includes unrealized gain, so the Bitcoin that was mined but was not sold. It includes the Bitcoin that was sold, and it includes the curtailment revenue. I'm not going to tell you how you reach that conclusion, but assume that is right, and it's right. By assuming 300 Bitcoin that the company mined on these three months, maybe it was less on October. We don't really want a definitive value. We want a good guess. So let's assume 300 Bitcoin. Let's now get the Bitcoin closing price on that month. So you multiply 300 by the Bitcoin price and then subtract it to this revenue. And the result is very likely another revenue that's not tied to Bitcoin. So you could say that that's curtailment, and other sorts of revenue most likely tied to curtailment. So now you have a range here, 1.8 to a maximum of 6 million, and you can have here an average. If you now you take the expenses and then subtract this revenue from curtailment, and the reason why I'm subtracting is this because curtailment is what allows you to lower the cost on your energy. You will get this result, which is very interesting, right? Because we know the company said we are mining at 24K. And here we have 27 to 22, sometimes 10, sometimes 22 here. So I do believe this is the calculation that they are using to say that they are mining at 24K. And another interesting point here is, as you can see here on December, we had a very large revenue stream from curtailment. So some people were telling, why does the company still have another contract with another managers on the Midland side? And I think this is the reason, is that whoever is there still did an amazing job before had joined in. So they are using this team to benchmark Hut 8. And so now that we have these two ranges, we can figure out this value. And let's start just by calculating the revenue of the Bitcoin that they mine. This includes the realized and unrealized. And basically you just take the closing price and multiply by this Bitcoin, and you'll get this result. Here on the expenses, I used the January expenses, which were the largest one, and it was the last value, which means that the company on January was most likely the company on February. And I add the HUD fee. I add first the initial fee that we paid. It was paid quarterly. So I'm not sure how the second quarter was calculated here. I'm going to assume this value, because this is the new deal, which they lowered the fee. I also assume that on April we fully deployed the containers that allow us to mine on Cedar Vale before the 4 buildings are finished. And with this, we take the minimal. So with this, I take the minimum curtailment revenue that was done before emergence, and I divide it by the total megawatts, and this gives you the price per megawatt. So each megawatt was generating this amount of revenue and curtailment, and this is the maximum potential per megawatt. I do the same with the West Texas bias. I do this because I do believe most of the curtailment is coming from West Texas. And I just put this as perspective and potentially not hide a more profitable business. Here is the maximum curtailment per megawatt. It gives you the previous values because we have the same megawattage as before. And here is more or less the revenues that I calculated. I use the minimum curtailment per megawatt here because I do believe there is a correlation between a more aggressive mining and less curtailment. I don't know. But these values is more or less what we were reported before. So before emergence, the maximum revenue that we reported was 18.79 million, and this gives you a better, more in line value. But it's Q2 that we are after. So here, when I assume that we deploy 40 megawatts on April on Cedar Vale, and I calculate the extra cost. I do this by dividing the energy cost per megawatt, and I add to this. And so you can see here the minimum curtailment per the average, so by dividing by this average. And here is the curtailment maximum with the West Texas bias. And where do we get the value that Ionic reported? Is by assigning the curtailments per this total megawattage. And this is very interesting. This is no coincidence, okay? So this means that my calculations are a very good guess. It doesn't mean that the individual, this is the total revenue, but this means that the average of this, which is 90.4 million, very close to what we had before, must be very close to the real value, okay? And there is some nuances to here, because this total revenue might not be $1 that can be spent in whatever Ionic wants. As far as I know, most of the curtailment is left on a balance with ERCOT, which is the energy grid company in Texas that manages the grid. So what that balance mean and that revenue is probably, if you want to mine more Bitcoin, that's the only way that you can extract value. So even if you had, for example, 20 million here, if you cannot mine more and take advantage of that credit that they are adding to your balance, you might lose it, or there might be some nuances to here. And this could explain why they are reluctant to release EBITDA or cash positions, because one might not paint the full picture. It's not a total excuse, but it could be one. Add that together with the fact that Mike Cagney and Tony are making an hostile approach to the board. This could explain why they are more protective about this value. At the end of the day, I think they have more cash than people think, but I wouldn't not credit each dollar here to a dollar credit on the balance sheet of the company. And if you prolong these calculations, the value that I get is 31,000 per Bitcoin on Q3. And just to finalize, I just wanted to highlight here about the April health. So you hear me say, why do I think that they deploy their containers on April? That is simply, if you add all the mining rewards on April and then assume that there was no halving, they will have gotten 357 Bitcoin. That means that they had an increase by like a significant percentage here, right? And that's why I'm assuming that the containers were deployed right here. Another interesting aspect is that if you divide this value by 2, it's not 152. So there is a loss here, and I'm not sure if this loss is competitiveness in terms of the Bitcoin network hash rate, or they are realizing some gains. It could be that they are realizing some Bitcoin And here they were going a full long, and here, for example, they are realizing maybe 15% of their Bitcoin. The reason I say this is it's somewhat suspicious on their public statement that they say they mine X minus the hosting fees. So I have to dig more on that, but this value is there is something missing here, and I'm not sure what it is. And also here, this is an interesting value. I have no idea why there was such a big drop here, but maybe they are selling more Bitcoin, or they are moving the rigs from the containers to their buildings on Cedar Vale. So by October, this is the end of the month on October, they would have Cedar Vale B1, the first building, fully operational with the rigs plugged in. So you can see here on around 27th of August, the building was completely powered up. So these 2 months might be there that they are moving the rigs from the containers to the actual buildings. And then you can see a jump right here again, which makes sense. But yeah, and again, I think I'm the only one that managed to calculate this, and the only reason is because I'm using court documents that you feel like you go to jail, and it's very clear. These are probably the best numbers, and if you understand the background, you can extrapolate this information, and as I show you, it matches what is being officially shared with the shareholders. And everything that comes out public from the company has to go through a legal department. And you have some people here only have 400 shares and are doing a wholesale takeover to liquidate the company and have absolutely no clue of the business of the company. They haven't even looked at these numbers.
Liquidate this thing, put the professionals to do it, let them run a real auction. So it's not Mike's plan. This is my plan. This is a shareholder-led liquidation. I called Mike, and I actually called him because we could use his blockchain to distribute the funds. But then we kind of, I don't know, partnered up, whatever you want to call it. So his original plan, and I guess he spoke to the board however many times, he wanted to take over the HUT deal, basically, the situation. At this point, this is just remove the board, put in a new board, and then begin the liquidation process.
Everything is here, okay? Everything is it's public. You can figure things out. I'm speaking as a former Vestas software engineer, and if you don't know, Vestas is the largest producer of wind turbines in the world. And I dealt with some of our sites in West Texas. We had some of the largest farms there. And if you don't know, the Texas unregulated market, it allows the energy to actually go negative. So sometimes at specific sites, due to the transmissions and the logistics of the grid, sometimes the grid actually pays you to use energy or to not produce energy. And some of people that don't know what they are talking about, they speak about using free energy to create hydrogen. And this is bullshit, because it's much cheaper to just invest into batteries and save that energy rather than convert into hydrogen and then store it. But it's even cheaper to just have a bunch of mining rigs that just consume the extra energy or allow you to manage the peaks that exist in the power grid. So in this particular situation, it might be looking a little bit wasteful, but the investment costs of batteries versus just having a bunch of people that are willing to use free energy or just energy that it's too much for the grid to handle, that's very cost effective. And that's what I kind of understand that is the entire business proposal of Ionic. And I think it's something very particular to West Texas. I don't know if this is happening on the rest of the United States, but I don't think so. And if you just listen to the CEO interview, he basically underlines this.
What's interesting is, a lot of the renewables, wind and solar, tend to generate in non-peak times. And so, having the ability to use those assets off peak and then take yourself out at peak times to help the utility manage its peak becomes a win-win for both sides, right? And so you can get access to really cheap power off peak, then Bitcoin enables you to monetize that particular asset that way, just like there is stranded wind farms, stranded solar farms that took advantage of tax credits to buy them and then effectively shut down. Half the wind turbines don't move when you drive through, West Texas. I think in the main, the West Texas ERCOT region probably has the lowest energy costs right now.
But yeah, this is all I wanted to say. Just listen to people that actually know what they are talking about. Follow the numbers. And you always have to believe in the company numbers and precisely in what they state, because it always goes through a legal department, and if you lie, you can be jailed or pay heavy fines because it's a public company. But what you have to be mindful when dealing with a public company is what they do not say or what they clearly do not state. An example of this is FAQ on their company site. And the question is put if Ionic board compensation structure is in line with industry standards. They say yes, basically. In this particular case, we wanted to know if the compensation is being given in equity. In the Form 10 and what was approved on emergence was only 75K is paid in cash. The rest can be equity. And ideally, especially with the delay on listing, the board should have been receiving the compensation all in stock, in equity, or maybe 95% in equity or something like that. But the fact they do not state this probably means that it's not something that they want to go deeper in. This is what you have to press on. You have to put the question, not if it's in line with the industry standards, but if the compensation is being made mainly in equity and not in cash, and also ask for the average percentage of this. And this is all I wanted to say, so you should have a better perspective, which I think makes a good case for the value of the company.